have a very, very bullish floor. You all know that, with a very bullish floor. So if we've got a bullish floor, what is our narrative coming into today, guys? What is our narrative coming into today? We know, don't we? We know what the narrative is. Bullish rotation. The narrative is bullish rotation, right? So we already know that. So when you look back at our tweet from this morning, to remind you, 9:48 this morning, London, the floor is bullish rotation, as you knew this morning. So bidding the sweep was a straightforward trade to get the gap fill. That was the trade that we talked about with Melvin this morning, remember? We were talking about the gap fill. So obviously we've got that bullish rotation. We get our value back. We got a measure move. We've got a bullish order block. Heavy selling into the cash open. Heavy selling my arse into the cash open. Look at it. It's hardly even registers into the cash open. It's just a dent. So when we get that dent coming in here, we get that dent reversing. And obviously in line with that, we're bullish into the cash market, bottom edges. And then what are we doing? We're coming off a measured move, a daily pivot, a wholesale price. What else you want to add to that, right? What else you want to add to that? There is nothing else to add to that. So the original trade was a buy for the gap fill. It did okay. Perfectly good. The sell came in, you obviously either took profits and got scratched or simply got scratched, and then sold at 5s. You got down to a low price of 98s for 7. $350 in 60 seconds. Great trade, well done. Now obviously when you get down into that price area, the value is now bullish again, and now you've got your bullish floor, bullish rotation, bullish order block, measured move. You have a wholesale price. You have everything to get long now. Everything, correct? So you now have everything to get long. Your first target price is 18s. Why? Well, you're buying it 98s. It's $1,000. And your second target price must now be a full move against this price area here. So I think it would be reasonable for you to consider that the day target is now going to be somewhere in excess of 34. If we can get through this 18, trip it back up, maybe build some liquidity traps around about the 15s down to the 10s. We could handle that, right? We could probably handle that as far as a narrative is concerned. So I think that might be something of interest for us. So perhaps a little liquidity trap into this area here. Why that area? Why that area, guys? Well, hopefully you're starting to do this for yourself. Hopefully you're starting to see all of these elements yourself. Well, you can see in the background what you should have been doing is you should have been narrating this area here, shouldn't you? So what would you call this area? What would you call this area? Well, you could call this a cap sell, couldn't you? So you could call this a cap sell. And if you call this a cap sell, then of course, if the price breaks through here through using a very, very aggressive break here, we can obviously consider this to be a buyer's pending level. Yeah? So this could be a buyer's pending. So why would this be the buyer's pending level? Because we haven't taken out this level here at 18s, have we? In other words, the buyer's pending level marks what? What does a buyer's pending level mark? A break of structure, yeah? So when we get into a buyer's pending level, we must have broken structure, yes or no? Because we can't get a pending buyer's area here unless we've broken a previous cap sell or a pending sell, right? So this is called a break of structure at this price. We did this 10-star course a few weeks ago, didn't we? A few months ago. So that 10-star course that you should all know about, that is the break of structure. So if that's the break of structure, what are we wanting in here? We want to try and see a test into this. What would we expect to see in a test environment? Liquidity generation. How do they generate liquidity? How would you set up this buy trade, guys? How would you set it up? How I would set it up if I had complete control of the market would be to take it down, take it up, take it down for a double bottom, preferably, right? For a double bottom, everybody's dead excited. Take it up, possibly take out the highs, possibly go ahead, take out the highs, and then sweep it to the downside. And then take it to target. Would that not be the perfect setup? Yes or no? Would that not be the perfect setup right there? It'd be absolutely perfect. Well, if you know what perfect looks like, guys, you should be looking for perfect, shouldn't you? You should always be looking for that type of setup every time you trade. You should always be trying to figure this type of storyline out. So, for example, why did I get a buy at 40.98? Because we had a buy here off the wholesale, and then the buyers came in again here, and then the buyers came in again here, and then we swept the whole damn lot of them for the buy trade. You see it? So the buyer came in off the bottom, the buyer came in on the halfback, the buyer came in on a double bottom retest. In other words, what we're wanting here is exactly what we got here. And then we obviously just got that bottom edge absolutely perfect here. And then we've managed to sweep the price for $1,000. Is that not crazy easy? Well, look for it then. If it's crazy easy, look for it, understand it, try and find it. These are all the key ideas of trading the markets, the technical stuff that gives you edges on its own, just without even any value. Those technicals give you some edges to play with. We'll be touching on that in classroom this afternoon, guys. It's what I want to cover in the doofus class on Monday. I want to cover this in the doof class on Monday, and we'll make sure that everybody at least has a basic understanding of market structures that can allow them to see the most obvious stuff.